Is there going to be an impact on overall GDP here if corporations are forced to pay at least 15%, both abroad and here in the United States as well?
Well, certainly I don't think there's an impact on the short term because the implementation and the details of this still have a long way to go. I think over time, certainly the idea that we could begin to remove some of the tax havens and have an impact on where companies operate, where they book their profits, is, I think, of some consequence here over a longer period of time. And I think ultimately one of the questions is whether this means that corporate taxes are going to move higher more generally. And I think the trajectory is in that direction, although I wouldn't argue much is going to happen anytime soon.
Yeah, very hard to obviously understand how this is going to go in the near term, to your point. Is there, though, a point at which corporate profits could be impacted by this, and or what would be your overall view from an economic perspective of higher tax rates, let's say broadly, within, let's call it, the next couple of years?
Well, I think the trajectory is probably biased in the direction of higher corporate tax rates. I wouldn't take a very confident view about how much. I mean, one point we've been making, and I think it was true with the corporate tax cuts in 2018, and I think it would be true now, is that it probably doesn't have much impact on investment decisions. So in terms of profitability, in terms of location of where corporates operate, I think there are some implications of this. In terms of actually the spending and GDP consequences for the U.S., I would downplay that, certainly over at least the next couple of years.
Yeah, I mean, I get that's like more the fiscal side of the puzzle, but then you factor in the monetary side of the puzzle, and you've got the Fed meeting this week, and perhaps an even more focus than the actual timeline for a taper, which is widely expected to be announced this week, is going to be how quickly the comments around inflation, and how quickly the Fed begins to raise interest rates. And certainly the markets are pricing in a much more aggressive stance next year than what we've heard from Fed officials. So how does that discrepancy change, or I guess evolve, as we have this broader conversation?
Well, I think evolve is the right question. And as you were saying, taper is going to be announced and it's going to be put on automatic pilot. So the key issue this week is about guidance on rates. And I think what Powell is going to do is sort of maintain optionality. They have a framework. I think it is going to be focused on the degree to which inflation, which is extremely high, comes off. And perhaps most importantly, the degree to which they think the labor market tightness is getting us towards what you might call full employment. I think the key release last week is the employment cost index showing wage pressures. The key release this week will be, if we're right, that the unemployment rate takes another tick down, 2 ticks down to 4.6%, both showing we're moving quickly towards a tight labor market in the U.S.
Bruce, do you think the way we're gathering data for the labor market right now is actually capturing the real accurate picture?
I think there's always problems, and there are particular problems around the pandemic. And I think the big issue here is less about whether the data is accurate now, but what it tells us about the future. There's a large mismatch between people who are out of the labor force and jobs that are available. We've just removed a lot of unemployment benefits. The economy is still in a very big transition on sectoral performance. The question is, as we move forward, will we get the supply that is not available right now to match where that demand is? And, I think we're cautiously pessimistic on that we think there is going to be lasting impacts here.
Hey, Bruce, if we're talking about the long-term trend on corporate tax, some say they're, to this day, surprised that the Democrats, with control of the White House, the Senate, and the House, really couldn't move corporate tax much above 21. I wonder if you were also taken aback by that.
Not really, although I wouldn't claim to be a particularly astute political analyst here. But I think the pressures in terms of how the political landscape is shaping up makes it hard to raise taxes. And I think we're going to see that in the final proposal here. I do think the overall sort of movement we're likely to see in the next few years is to try to broaden and increase corporate taxes, regardless of the administration. And I think there is that trajectory which is changing globally and in the U.S. But I don't think we should argue that's going to be the dominant macroeconomic driver either of corporate profitabilities or macro performance more generally.
Bruce, appreciate it. Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.